Hello and welcome to the special series Asian Tigers from Hong Kong. I'm featuring some of the biggest fund managers on their view on emerging markets, including India. My guest on the show today is Gary Pinge from Comgest. Comgest globally manages close to 20 billion euros, and Gary co-leads the Asia Pacific strategy for Comgest. Gary, thank you very much for joining us on the show today. My first question, the MSCI EM is up close to 14% from the recent lows. Do you think there is more steam left for EM to perform?
You know, I think the emerging markets that you saw a significant amount of volatility. I think a lot of that volatility was driven by a couple of factors. When you look at emerging markets, certainly across Asia, Latin America, even Russia, a lot of it is, they are commodity-driven economies to a large extent. And so when you had volatility in commodity prices, that affected the fiscal situation that a lot of these economies were seeing. And I think that was one reason for the volatility. The second reason was once you put the fiscal situation in the context of what the Fed was talking about doing, which was raising interest rates, and people were looking at almost an interest rate increase every quarter in 2016, that created further volatility for the emerging markets. A couple of things have happened since then. Firstly, you've seen commodity prices now, some would say bottom out, or seeing less downside risk. On the other hand, I think what you've also seen is the Fed taking a much more measured approach towards the interest rate cycle in the US, which I think has given people some level of reprieve in the markets. And so I think when you look at a lot of the emerging markets, the core growth is largely intact. And so I think when you look out over the rest of 2016, I still think you will see select emerging markets outperforming others based on the fiscal situation, the political situation, and of course the internal economic dynamics.
Sure. I'll ask you about emerging markets, especially China and India, which are the two biggest overweights. But you spoke about the Fed rate hikes. For 2016, what's the Comgest view? Are we going to see more aggressive or a dovish statements coming in from Fed?
You know, I think the emerging markets are a lot more important to developed markets today than they have been over the last 5-10 years. And so I think a lot that the Fed is going to look at over 2016 is going to be centered around what the impact on the emerging markets could be from an interest rate cycle. Certainly their focus is on inflation and on managing inflation in the US and on labor markets. But a lot of the companies that are in the US now have got significant operations that sit outside of the US as well. And so I think, you will see interest rate increases. I think the latest data suggests that people are looking for perhaps another 1 or 2 interest rate increases this year. But I think you'll see the Fed being a lot more mindful of what's going on in a global context rather than focusing purely just on the US.
Sure. The other big puzzle for most of the investors is how the global liquidity is going to play out. The ECB is pumping in more money. The BOJ is pumping in more money. In that global context, how you think flows will move into emerging market equities, and within that, which are the EM equities which are likely to benefit in terms of global flows?
I think that, when you look at the BOJ and the ECB actions, a lot of it is obviously trying to stimulate their own economy. I think a lot that you see going on around the emerging markets is predominantly going to be focused around what's going on in the US. In the US, I know that in the last meeting that Yellen had, that the chairwoman had, she did come out and say that they would look at more quantitative easing if they needed to, but I think a lot of that is probably a little bit further down the track, because if you look at what's happening with the labor market, if you look at the inflation data, I think the US is showing pretty consistent signs of improvement in its economic situation, and so I think the actions of ECB and BOJ are certainly important for emerging markets and in the Asian context, but I think the US is far more important, and so I don't think that the US is going to look at such broad-based quantitative easing as they have looked at in the last 4, 5, 6 years.
Sure. So coming to emerging markets now, the two biggest overweights for you in that Asia Pacific strategy or in that Asia Pacific fund is China and India. I'll talk about India first. That's the second biggest overweight for you. How are you tactically positioned India at this point in time?
So, perhaps to talk about India is worthwhile talking about China as well, because we see these two emerging economies as being quite different. India we see as an economy which is far more in the stage of industrialization. We think infrastructure investment, infrastructure deployment is going to be quite important to India as it tries to meet power demand, as it tries to improve infrastructure, road infrastructure and things like that. So a lot of the things that we have invested in India are predominantly from an infrastructure standpoint. And they're companies such as Power Grid, Bharat Heavy, and those sorts of companies.
Okay. Well, infrastructure is a big trigger for a lot of these investors, but are you convinced that there are a lot of orders being issued by the government, and there is a real pickup that you're visible to see in India at this point in time?
Yeah, I mean, I think, firstly, as Comgest, we take a very long-term view on investments. And so we're not particularly interested in the quarter-to-quarter numbers that are coming out. Of course, they are important to monitor. But I think that when you look at companies like Power Grid and Bharat Heavy, you have seen a lot of orders coming through. What's more important is that a lot of the orders have been, a lot of the work that they've done previously has started to get commissioned as well, in terms of, and there's a lot more stability on tariffs as well, and so I think you've seen some of that starting to come through in the share prices. For Bharat Heavy, it's been a little bit more difficult because the orders have started to come through more recently. But again, if you take a longer-term view, and I think if you try to see what India is trying to achieve from a 5-10 year standpoint, I think sectors like power are going to be very critical to achieving what India wants to achieve, and that's where we see valuable investment opportunities.
Okay. The other big overweight sector for most of the global fund managers is the banking space. We've seen some bit of reforms there, but the biggest worry for most of the global investors is the NPA situation in India. How are you looking at the banking sector stocks in India at this point in time?
So at Comgest, we focus on looking at companies where there are significant barriers to entry and they have competitive advantages. So for us, the way that we play the banking sector is by finding companies that have very strong distribution platforms and as I said, very strong competitive advantages. So the way that we look at it is by looking at companies such as Shriram Transport, for instance, which has a great rural network. It has a great ability to help finance and help fund a lot of the equipment and a lot of the auto related investments that rural India makes. So that would be our kind of core holding. We would also look at insurance companies because of course as an emerging market starts to grow, people's lifestyle starts to become more of a focus as well, and people like to insure the future of their lifestyle, and so life insurance becomes a pretty important part of it all. Okay,
so have you looked at any of the insurance companies in India? Because there aren't many which you can picture at this point in time.
Yeah, we've looked at companies and we think that life insurance in India, kind of a little bit different to China, is in its earlier stages. But certainly there is investment coming through. There are global companies that are interested in breaking into the Indian market. And so, there are companies that we think over a longer term basis are going to show very good growth.
Okay. Garry, in your fund, one of the biggest overweights in terms of sectors is IT. You've seen a lot of news of late in the IT space, a lot of consolidation happening with some mid-cap companies getting bought over. Broadly, what's the sense in the IT space? Are there enough opportunities for you to buy into the Indian IT stocks?
I think the IT space in India is a very interesting space because if you look at it over the last 5 years or the last 10 years, IT outsourcing in India has largely been driven by pricing dynamics. So every time a contract has come out, IT companies have tended to compete based on pricing. With things like automation, with things like big data, all these new trends that are coming through in the IT world, I think there is a much greater opportunity for Indian IT companies to differentiate themselves based on their services and perhaps not see as much price erosion as they have been seeing in the past. They've been competing on pricing. And so I think that paints a very attractive backdrop for us. And within that, companies like Infosys with a new management team that are trying to revitalize the business and being quite successful at it as it seems at the moment, is something that's of a lot of interest to us as well.
Okay. You spoke about IT as a sector which interests you, and you spoke about data. That's one space where probably you have a bit of an exposure is Bharti. I believe you're looking at a data exposure into a big data expansion into India, which is why you've got an exposure there. What's the view on telecom? Because we're going to see a big player coming in, and a lot of people feel it's a potential threat to the incumbents. What's the view there, and what's the view on the overall telecom space in India?
I think when you look at the amount of money that's been invested in the telecom space in India, and you look at the returns that the mobile operators are making in India, they're on the lower end of the spectrum when you look across a lot of the Asian emerging markets. And so, first and foremost, I think that there is scope for pricing to go up over the longer term. But in the near term, I think you still need to see greater take-up of data-related services. And to spur that growth on, you need better handsets with better form factors. You need data pricing to be more affordable. And so you can still have a consumer spending more on data, but that comes through as a result of consuming more data as well. And so I think that the outlook for data take-up in India looks particularly exciting, and I think where a lot of people are concerned about the impact that Jio could have on the market from a negative standpoint, we think that when you look at it over a 5-year period or even longer than that, we think that Jio will actually be quite critical in terms of spurring growth in the data segment. So if you already look at some of the new handsets that are coming into the market, Jio has been quite instrumental in terms of pushing the ecosystem for India in terms of handsets and form factors, and I think that will be quite important. So we're quite optimistic on the data growth in India. Of course, one of the main ways to play that is through Bharti Infratel, the company that has the tower sites, because obviously you're going to need more towers to be deployed, and that's the main way that we look at it. Yeah.